Bom dia, Moisés. Tá escutando? Good morning, Waki-san.
Hi, good morning.
Can you hear as well?
Yes. Can you hear me?
Yes, I can hear you perfectly. I mean, good
Okay.
evening to you. Sorry.
Good morning.
I think Moisés is checking his
Yeah,
audio.
I think now, can you hear me now?
Now it's okay,
yes,
Moisés.
yes.
Now we can hear you perfectly.
Okay. Nice to meet you.
Nice to meet you.
You guys haven't met before. This is Moisés Ballet, my colleague, who's a co-organizer of this series.
Mhm.
I
Yeah,
think
I was in Japan in 2018, but I think we haven't met there.
no, we,
Really?
Yeah.
yeah, Waki-san, in fact, was in Kyoto. No, remember we met in Kyoto, and we are going to the SASI meeting, I think, but you are at another meeting at the time. Remember?
Yeah.
I have not participated in Thursday.
Yes, I remember that.
Hmm.
So hopefully, Waki, you can come back to Brazil next year, where SASI will be held in Rio.
Oh, really?
Yeah.
2023,
That's good.
SASI will be held in Rio. So I hope we can put together something so you can come.
Yes, yes.
Hmm.
That's fantastic.
Fantastic.
Yeah. When do you hold it? In
I
summer?
think it's going to
July.
be around July. I'm not sure. They haven't come up with a date, but I mean, they just announced, it's going to be in Rio in 2023.
Yeah.
But usually in July, August, around that time.
For winter.
Yeah, it's a good time.
Mm.
Good. Well, thanks for accepting the challenge, to make the comments to this paper, to this presentation by Professor Waldenberg. Good afternoon, Professor Waldenberg.
Yeah. Hello. Good afternoon.
Hello.
Or
Good
good
afternoon.
evening.
How are you doing?
Good
Yeah.
evening. Yeah.
Good evening.
So
Good evening.
you're all in Brazil, or
No, I mean, myself and Moisés were in Brazil. You and Waki are in Japan, I believe.
I see. Okay. Yes.
Yeah.
Good.
Had you had the opportunity to meet Waki-san?
No.
No,
No, not yet.
Okay.
I met a few people of course, from the German JETRO.
Mhm.
No. So, but no, I haven't.
Not, people
JETRO
from
is a very
IDEA
big
yet.
organization. Yes.
I see.
Yeah.
Well, thanks for accepting our invitation.
Mhm.
I'm sure you're going to have a very good and lively and interesting webinar.
Well, I hope I can present something that's
I think it'll be
interesting
very
to you
interesting.
and stimulates discussion. Yes.
That's the purpose here.
Mhm.
For us to learn, for people in Brazil and elsewhere, and especially in Latin America, to learn more about Asia and in the specific traits of Asia, like your discussion today about in company, careers, which is, and how does it affect, the corporate governance, which I think is very interesting argument. So I'm looking forward to it.
Thank
Mhm.
you.
Yeah, and yesterday I was reading at Nikkei Asia that the president of the Tokyo Stock Exchange market, he was interested in attracting more activist investors, which is
Yeah. Yes. They want. I mean, that's long a discussion. Japan many years ago, I think 2015 or so, they introduced the stewardship code. They want this active investor dialogue, institutional investor dialogue with companies. And of course, they had some not so good experiences with too aggressive. I mean, you have to distinguish between active and aggressive investors. I think the active ones, everybody welcomes. The aggressive ones, maybe not so much. But yeah, and so I think also Japanese companies, of course, since many years started investor relations. That was something 20 years ago they hardly knew what it was, but then now it's very common. Every company does it, and yeah, so a lot of things have changed, but there have been some fundamental core elements that haven't changed, and that's I'm going to talk about. Yeah.
Oh, great. Yeah. Because the VOC always stresses Japanese patient capital and
Patient
sort of
capital,
thing.
exactly. And it's it's many of the investors in Japan are patient. They know the situation, but also because the shareholder structure changed a lot in Japan over the last years. I mean, over the last 30 years, many large companies are now they are 30%, 40% foreign shareholders in these companies. So and the so-called stable shareholders that Japan used to rely on, and the main banks, they all disappeared. And so now Japanese companies are hoarding a lot of cash. They have a lot of cash as a sort of buffer to buy time, when they need to restructure. So that's also one side that has been criticized a lot, that Japanese companies sitting on cash, and of course cash doesn't earn returns.
All right. Antonio, would you like to can I start, because we live stream this on YouTube, and so can I start live stream, and would you like to make an introduction?
Yeah, let's give it another 5 minutes, because it's kind of early here in Brazil.
More people. Okay, yeah, that's
and
right.
then we let's start like 5 minutes from now, so we can have time to come in and get settled. See that some people are still joining, as I saw. Usually we start like 5-10 minutes later, because it's Brazilian time, as we say.
Brazilian, yeah, I see. So people, in Germany or Japan, if you start 5-10 minutes later, people get really nervous. They think, oh, something happened, and maybe this is not going to take place at all. And
yeah, that's why you're giving a warning if you have some German or Japanese attendees, so they know that.
Okay.
Don't anyone to get nervous.
So yeah, so in Japan or Germany, that we would have met maybe 10 minutes, 15 minutes earlier to check everything, and then we start perfectly on time.
Yeah. We do the other way around. We start on time, the broadcasting, and then we take 10-15 minutes.
Yes.
Cultural differences.
Yes. Yeah.
So how are things in Japan? How is the Omicron variant there? It's holding up. I mean,
it's taking over now. I mean, nobody can avoid. I'm still, I think the situation is still very moderate compared to Europe now. Ueki-san, what do you think? What do you?
Yes. People doesn't really care. Some of the elderly people and also students have concern, but for business people, I think they want to move more.
Japan is basically closed. It's like sakoku people say, no? So the Edo period, closed country. And it's but it's not only Japan, also in Asia, China, and other
Malaysia,
Australia, they tried a zero infection policy, which is crazy. It's stupid. I don't know what people think. I mean, there are so many trade-offs, and it's I don't know.
Because in Rio de Janeiro, the Omicron variant, has peaked. Now things are starting to relax a little bit.
So I think in Germany, in Europe, Denmark is setting the example. They have very high vaccination rates, and they did away with all restrictions. They have the highest infection in Europe, maybe worldwide. Almost everybody infected, probably. But because people are vaccinated, they not so much problems in the hospitals, and everybody is free to move.
Yeah, but in our case, the vaccination rate was about 75%.
No, that's
that's and yesterday we had almost 1,200 people who died.
Wow, that's bad.
The mortality rate is still very high.
Okay, that's really bad. I mean, in the US as well, you have a relatively high mortality rate, probably because also not many people are vaccinated, and also of course that you have this the physical obesity, you have physical problems in the US that also I think affects the mortality rate. No.
Yeah, it's for first it's US, India, and the third country is Brazil.
Okay.
With highest mortality rates.
Mortality rates. Okay. I see. Wow. That's amazing. I mean, if you think the US as a leading country, it's really a shame. And they produced the vaccine. I mean, together with the German company, the Pfizer vaccine.
Yeah, that's the surprise, you know. It's not a question of a lack of vaccines, no. Don't want to vaccinate, and there's a lot of comorbidity, you know, situations there.
So Antonio, when were you at Sophia University?
I was there in 2018.
2018. So we missed each other.
No, 19. Sorry, 19, 20. Yeah, no, 18.
18. Yeah. I think it was 18 because I visited you there.
Definitely visited Japan, right?
So, but you know, you knew Florian before?
No, I met Florian at Sofia. In fact, you know, I think I was at the end of my.
He was there as a visiting scholar as well at the time.
He was. I think he came at the end of my stay there. No, I think.
He was there.
Scholar, and I was finished my teaching term there.
I see. Yeah. I see. I thought you'd been there when he was director. He's my predecessor. You know, he was director of the DIJ before me. But I remember he was there 2018. Yeah, we met a few times.
And I had heard about him when he came to give a lecture at Sofia that he had been director there before. So but I just met him then.
I see.
Okay, so let's. It's 8:40 now here in Brazil. Let's get started. So it's a great pleasure now to have Dr. Franz Waldenberg, director of the German Institute for Japanese Studies in Tokyo. I think, but who's going to speak to us today? Remember?
Europe, Denmark is a leading country. It's really
18.
2018. So we missed each other.
No, 19. Sorry, 19, 20. Yeah, no, 18.
18. Yeah. Okay. So
shall we get started?
Yeah.
Okay. So let's start this new edition of the Comparative Political Economy webinar series, Asia 2020-2022. This series is sponsored by the Economic Sociology Network of Rio de Janeiro, which is composed by graduate programs of Maior University, University Cândido Mendes, the Federal University of Rio de Janeiro, and the Federal Fluminense University, and together with Comparative Studies of America graduate program at the University of Brasilia. And it has the support of the Economic Sociology Research Committee of the Brazilian Society for Sociology. So today's event, you know, is going to be given by Dr. Franz Waldenberg, director of the German Institute for Japanese Studies in Tokyo. And he's going to be talking about Japan's economic performance. Does corporate governance matter? And we're also very glad, you know, to have as a discussant of this presentation, Dr. Yasushi Ueki, who's a senior researcher at the Institute of Developing Economies, Japan External Trade Organization, also in Tokyo, Japan. So without further ado, you know, I'd like to give the floor to Dr. Waldenberg. You know, we'll have like 30, 45 minutes, presentation, followed by 15, 20 minutes by comments by Dr. Ueki. So Franz, whenever you're ready, please go ahead.
Yes, thank you very much. And thanks for the invitation, Antonio. I would like to share my screen.
Sure, I think Moisés can allow you to do that.
I think it's possible. I think, can you see the slides?
Yes, you can see
it. Okay, good. So yes, well, actually, I'm not sure. How much time do I have?
up to 45 minutes. No, take your time.
Okay, that's fine. If it was 15 minutes or so, then I would be in a hurry. But okay, 45 minutes. That's fine. So the topic today is Japan's economic performance. Does corporate governance matter? Why do I pose that question? Well, let me, before people fall asleep, maybe let me give you the main line of my argument, what I'm going to develop later, my line of reasoning. So in Japan, actually, the government thinks that corporate governance matters, and now we no longer have the Abe administration, of course, but during Abe and Abenomics, corporate governance reforms were a pillar of the revitalization politics that the Abe government pursued, and Kishida is more or less following. So the answer was to the positive, that corporate governance matters. The corporate governance reforms I will mention later, they assume that corporate governance is to blame for the underperformance of the Japanese economy. And actually, when you look at the performance of Japan's economy over the last 20 or 30 years even, you can say that there has been a poor performance, relatively poor performance, which I call a performance puzzle. I will explain later why. Now, but how does that really relate to corporate governance? And I will point out some of the peculiarities of corporate governance, but Japanese corporate governance is different from other systems. Like each national system has its own differences, peculiarities. So there is nothing peculiar about Japanese peculiarities. There is no global corporate governance system. If you take US, Japan, and Germany, one of the three leading high developed economies, then you will see that all three have very different systems of corporate governance. So in a way, these peculiarities are only superficially linked to the performance paradox, which I mentioned, the performance puzzle. The correlation is in fact spurious. That means that corporate governance and performance, they are both influenced by a common third factor. And this common third factor, which is going to be the central point I want to make, is our institutionalized in-house careers. They are both influencing corporate governance. They are sort of responsible for the peculiar features of Japanese corporate governance, and they also influence performance. So it's an indirect relationship between corporate governance and performance. Both are basically influenced by these institutionalized in-house careers. Now, coming back to this, to the policies, corporate governance reforms, they will only be successful if they actually contribute, if they sort of are able to tackle the root of the problem or the root of the issue, namely these institutionalized in-house careers. So now you basically know what I'm going to talk about, and let me show you then in detail what the outline is. I will mention briefly the corporate governance reforms. Then I will talk about Japan's performance puzzle. We'll look at Japanese corporate governance, then explain what I mean with institutionalized in-house careers, how these careers are related to corporate governance, and then how they are related to performance. And then I will come up with a conclusion. So recent corporate governance reforms, actually, it started basically with the beginning of Abenomics. In 2014, Japan introduced a stewardship code, something that the UK had set an example for. This stewardship code has been revised, I think 2 or 3 times. The last revision was 2020. There have always also been revisions of the Companies Act, which also provides the legal framework for corporations and therefore also for corporate governance. The last revision was 2019. And Japan introduced a corporate governance code, which many other OECD countries had done before. Germany, for example, in 2000. Japan introduced the code in 2015, and it has been revised. The last revision was 2021. So you see there's an ongoing reform of the legal framework for corporate governance. Now, the purpose of these reforms have explicitly been growth orientation, to support the growth of the Japanese economy. And of course, since Japan now has a declining population, we cannot expect growth in absolute terms. We're more talking about growth in terms of GDP per capita. Growth orientation, or the Japanese term seme no governance. Seme means actually aggressive governance. And the idea is to induce more risk-taking among Japanese managers. How? Well, I mentioned the stewardship code and the corporate governance code. The stewardship code is supposed to stimulate investor dialogue. Especially institutional investors are requested to enter into constructive dialogue with management, and the corporate governance code is concerned. One big central concern is the role of independent outside directors to make the boards more independent, more transparent, and to also make it turn sort of the insider system, the Japanese insider system, into one which has a more transparent control by outsiders, by these independent outside directors. Now, the point is that both the stewardship code and the corporate governance code, they are not strict. They don't sort of formulate strict legal requirements. It's basically soft law. The companies are supposed to comply to these principles that are formulated in the codes, but they don't have to comply. They are not legally obliged to comply. If they don't comply, they must, however, complain. Sorry, not complain. What's this? That's the wrong. Let me see. That's the wrong. Definitely the wrong word. It's explain. They have to comply, or if they don't comply, they have to explain why they don't comply. So it's a comply or explain principle. It's soft law. Now, so that's the idea. So obviously the government thinks that corporate governance is at the root of Japan, or is at least an important factor for Japan's economic performance. And therefore, corporate governance reforms are needed to improve the economic performance of the Japanese economy. Now, let's look at this performance. And I already mentioned that I think we can actually talk about a performance puzzle, because on the one hand, Japan has excellent resource conditions. Normally, when you think a company, the performance of a country, the performance of a country is not good, then it might be because it doesn't have excellent factors of production, like maybe the employees are not qualified enough, the education level is not high enough, or the level of technology is not high enough. That's not the case in Japan. Japan has excellent resource conditions in comparison with other leading OECD countries. If you look at the various data from the OECD, you see, for example, that Japan invests in research and development much more than other countries, other OECD countries, including Germany and the US. The R&D to GDP ratio, so research and development expenditures divided by GDP, is more than 3%. And this is a top level. Only smaller countries, maybe Sweden or Israel, they are above Japan here. Another indicator of the high level of technology in Japan is the share in global patent applications. It's actually the highest worldwide. Japan ranks #1 with regard to this indicator. When we look at labor, the share of adult population with tertiary education is also top. I think only Canada ranks higher than Japan among the OECD countries. And if you look at capital, the other important factor of production, the real long-term interest rates in Japan have been very low. So actually capital has been abundant in the Japanese economy for a long time. So in all respects, technology, labor, and capital, the resource conditions in Japan have been excellent. So with excellent resource conditions, you would expect that, of course, productivity would also be high. But it turns out that Japan's performance in terms of productivity has been below average in the OECD over the recent years. Now, these are the most recent data from 2020, the GDP per capita. They are converted into US dollar using purchasing power parities, so not the normal exchange rates. And you see here, top Ireland, Switzerland, Norway, relatively small countries. Then you have the US here. Then you have Germany here. I will frequently refer to Germany because I'm studying Japan, but I often do it in comparison or with reference to Germany. Here we have the OECD average, and here we have Japan below the OECD average. Now, this is GDP per capita. And GDP per capita, you can decompose a GDP per capita in 3 components. The GDP per capita obviously depends on how many people are employed. Yeah, the more people are employed, then the higher the GDP per capita. Then, of course, it depends on how long these people are working. So the annual working hours of the people employed. And then, of course, it depends on the productivity, the GDP per hour that is generated while these people are working. And if we take here the most recent data from 2019, we put the US equal to 100, and we see that there is a huge gap in GDP per capita between the US and Japan. It's just 1/3, 33%. Germany is also lower, 13%. You see that in terms of the employment rate, actually, in Germany and Japan is a little higher than in the US. That's actually the result of aging. So in the US, of course, the young population tends to not be employed. They are in education. In Germany and Japan, aging rate is high. So, especially in Japan, the elderly population continues working. So the employment rate is actually a little higher than in the United States, which would normally translate into a higher GDP per capita. The annual working hours, Japan has almost as many working hours as the US. Germany has one of the lowest working hours in the OECD. German people tend to be, you'd say, lazy, or they prefer their free time. So they give high priority to work-life balance. So Germany working time is definitely much lower. It's more than 20% lower than in the US. And then you see the GDP per hour, the last component. And here you see actually, Germany and the US, not so much difference, but Japan is at 62, so 38% below the US. So basically, the difference in per capita GDP in Germany, the people don't want to work. They prefer free time, and that translates into the lower GDP per capita. In Japan, people work almost, if you look at the employment rate, there's more labor input in the Japanese system than in the US system, but still, because the productivity is so low, the per capita GDP is very low. So basically, Japan's relative low GDP per capita is caused by its low labor productivity. And so that's that's a puzzle, because if you have excellent resources, you should actually be able to achieve a high productivity, a high level of productivity, but that's obviously not the case in Japan. So something is wrong with the way these excellent resources are being used. And well, it's of course, resources are used in companies, and companies are run by managers, and managers are controlled by the system of corporate governance. So it's, well, it's not surprising that people think, well, there must be something wrong with corporate governance. Now let's look at the Japanese system of corporate governance. It has its peculiarities, as other countries do as well. Now, empirically, actually, the system doesn't perform badly. It's rather, in comparison to Japan, to Germany and the US, you could say that the Japanese system of corporate governance is actually doing very well. If you take, for example, the number of listed companies, and the fact that these listed companies actually, they spread the capital that is listed is rather dispersed among shareholders, then you could see that Japan is actually making a lot of use of the stock market, of the advantages of the stock market. And therefore, Japanese corporate governance, well, in a way, is functioning well. I mean, corporate governance is all about giving companies the opportunity to diversify their risk, to raise capital in the stock market, and to diversify the risk by sharing, by having a lot of shareholders participating in the equity investment. So in that sense, Japanese corporate governance is doing very well. I will show you the data on the next slide. Also, Japanese top management remuneration has been relatively moderate compared to the US and even to European countries. So it's not, you know, in other countries, in the US especially, but also in Europe, you hear about the greed of these top managers, and they take all the money. That's not the case in Japan. So let's look at the data. So we see here, if you look at the listed companies per million population, Japan has about 30 companies per million population. This is more than it's 2.5 times the amount of the US. And it's 5 times the amount of German companies per million population. Actually, Germany, the stock market doesn't seem to be very attractive for companies. Germany has a very low number of listed companies. And so you see in Japan, there are many more companies, even more companies than in the US relative to the size of the population that get listed on the stock market. So the stock market seems to be very attractive. If you look at the market capitalization of these listed companies in relation to GDP, we see, however, that the US is higher than Japan, which means that in the Japanese case, among the listed companies, they're very small, relatively small companies that would not get listed in the US or in Germany. Yeah? So, but that's a good thing. I mean, even smaller companies in Japan have the opportunity to list their capital on the stock market and to take advantage of the risk diversification and of the funding opportunities that a stock market offers. So in that respect, Japanese corporate governance is really performing very well. If we think about corporate governance as a way to control and contain management, then also with regard to compensation, management compensation, the Japanese system is performing very well. These numbers are not directly comparable, but you can see the time trend. What happened in the US when you look at the S&P 500, the 500 largest listed US companies, you have here the CEO, the ratio between CEO compensation to average worker in the economy. And you see that this ratio between 1990 and 2016, this ratio basically quadrupled. So it's more than 4 times, yeah? More than 4 times, increased more than 4 times. In Germany too, on a much lower level though, Germany, as I said, there are very few companies listed. So our DAX, our stock market index DAX only contains 30 companies. And here we have the average of the management board member, the compensation, average compensation for management board members, and in relationship to the employee, the average employee remuneration in the company. And you see the ratio was 14 in 1990, and it rose to 50 in 2016. And in Japan, if you look at statistics in Japan, looking at the largest non-financial corporations and the average director's income to the average employee income in the same sample, there's hardly any increase, and it's a very low ratio. So these aggregate, that's on the aggregate picture, we didn't have this explosion of CEO or top management compensation that we could see in many other countries, especially in the US, but even in Germany. If we take another more concrete example, which I often like to compare 3 companies in the same industry about the same size, BMW, Honda, and Ford. And you see the CEO total compensation in 2016 for BMW was about $10 million US. Ford was double as much, 20 million, and Honda was just 1.5 million US. It's huge, a huge difference, sorry. And what we see here is that the companies are in the same industry. They are about the same size. That's the global number of employees. Honda is even bigger in terms of global employees. Honda is, well, the same global sales, total assets, market capitalization. They're very similar. Even in profit. Profit, actually, Ford has the lowest profit. And still, management has the highest compensation. Profit to market capitalization, again, Ford performs worst. So, but still, it gets a huge compensation. And another interesting point is that it's not only the level of compensation, but the share of fixed compensation. Yeah, fixed pay, the share of the fixed pay in the total compensation package. In Honda's case, 70% of the compensation is fixed. In the Ford case, only 10%, less than 10% is fixed. So 90% is so-called variable, yeah, share price compensation. In the BMW case, 80% are variable. Of these 80% variable compensation, there's share price compensation, but there are also other performance indicators, for example, like ecological performance and so on. So we see a huge difference in terms of compensation. It seems that the US managers are basically, nobody's controlling them. They take as much as they can, whereas in Japan, these managers seem to be extremely controlled in terms of the compensation package they can take home. Now, coming back to this question of corporate governance and performance. So we've seen that in with regard to the number of listed companies, with regard to management compensation, we cannot say that Japanese corporate governance is performing bad. But how does it influence the economy? So that's not clear by just only looking at corporate governance. So the question we need to address is, how are the peculiar features of Japanese corporate governance related to the performance puzzle that I mentioned before? And the other question then is, if there's something persistently and systematically wrong with the Japanese corporate governance, it must be something structural. It cannot be something that people can just simply change, that the shareholders at the shareholder meeting, or that the supervisory boards or the founder families, if if they could change it, they would change it. I mean, they want the company, of course, to perform better. So obviously, if something is systematically wrong, it's something that cannot be simply changed by the actions of shareholders and managers or supervisory board members. It must be something more structural. Now, there are two possibilities. So there must be some kind of structural factor. One possibility is that the structural factor affects corporate governance, and corporate governance through corporate governance affects performance. Or the other possibility is that there is a structural factor and it's both influencing corporate governance and it's both influencing performance, but there's no direct link between corporate governance and performance. And what I'm going to argue now is that we are actually, in the Japanese case, the performance puzzle is of the structure of the second kind of relationship. So it's basically a third factor, which is both influencing corporate governance and performance. So now, what is this structural factor? My research, comparative research of Japanese corporate governance, points to a very important core factor of the Japanese system, which I call here institutionalized in-house careers. What is an in-house career? An in-house career means that you get your promotion to the upper hierarchical managerial ranks occurs in the same company. You don't change companies while you move up to the top managerial, into the top managerial ranks. You do all your career in one company. Now, in other countries, other than Japan, in-house careers are also tend to be very common, but they are the outcome of a choice. They are embedded in an external market, which means that the managers, the people, can choose whether they stay in the company or whether they move on to another company. And the companies can choose whether they sort of promote people from among their employees or whether they hire somebody from outside. Yeah, so there is a market. These in-house careers are embedded in a market. In the Japanese case, in-house careers are what I call institutionalized. It's not a free choice. There's no market-based career for top managers among larger Japanese companies. They basically start at the bottom and move up to the top within the same company. If they leave the company, they might get hired by another Japanese company, but they will not enter the career track in this other Japanese company. Now, these institutionalized careers, how are they structured? I think empirically, we can point to two characteristics. One is at the entry stage of these careers, the very time-consuming selection of core employees among university graduates. If you teach at a Japanese university, you know that in the last year, the fourth year, the students hardly come to class because the last year they spent what they call shushoku katsudo. So they are looking for their employer. And the new graduates at the university, that's another aspect. So the other side of the shushoku katsudo is at the side, on the side of the companies, the ikkatsu sayo. That means that the companies hire among the first year graduates. All the first year graduates get hired, and some companies take, the largest companies might take 50 or 60 or so first year graduates, and all at once. No, they are not hired for a specific job. They're just hired because you think that's our pool, that's the pool of people from where we will sort of raise our future top managers. So at the entry point, you can see this very peculiar way of matching of graduates from university and companies. And in between, during the career, you see that the in-house career is visible in the very low turnover rates among managers in Japan. It's about 1%, very low, lower than the turnover rate of other employees, which is about 4 to 5%, which is also extremely low compared to other countries. And then at the end of these institutionalized in-house careers, at the end, what you get is executive directors who sit on the board with a 30-year in-house career background. And these executive directors with a 30-year in-house career background, they tend to dominate the Japanese boards of large listed companies. Sometimes the career might not be in the same, in one company, but maybe in the group company. So if you have Mitsubishi or let's say Toshiba or Hitachi or so, you have of course some subsidiaries. So they might during their career maybe spend a few years with the subsidiary, but they stay within the group. So how do these in-house careers relate to corporate governance? Well, these in-house careers are basically responsible for the insider control model, which is still sort of typical for the Japanese case. The insider control model means that you have the executive directors in a Japanese company have a lifelong career in the company. They are typically Japanese by nationality, and they're typically male by gender. So it's insider control because they know the company, they dominate the boards. There are very few outsiders. I mean, the reforms I mentioned in the beginning try to change it, bringing more outsiders in by force of the law. But yeah, the boards, the boards of Japanese companies are still dominated by insiders, by these directors with a lifelong in-house career. Now, on the other hand, if the managerial career, if your career as a manager is tied to the company, that's actually a very efficient way of solving the typical principal agent problem of corporate governance. You know, the principal agent problem of corporate governance is how can outside shareholders, the principals, how can they be sure that the managers, the agents, work in their interest? How can they be sure that the managers actually do the best in order to ensure the profitability of the company? Well, in the Japanese case, you don't have to worry so much because for the managers only have one company. They cannot run away. So they will do everything they can to keep the company going. So they will have to ensure a minimum profitability for the company. And they will do everything. They'll be extremely loyal to the company. And that explains why even in Japan, even smaller companies can get listed. It's the corporate governance problem because of these in-house careers. Actually, these in-house careers provide a very efficient way of solving the principal agent problem between outside shareholders and managers. They both are owners of the company in a way. No? The managers are owners in a way because their career is tied to the company. The shareholders are owners because the equity capital, which cannot be paid out, is stuck in the company. So both groups are stuck in the company and want the company to survive. So in that way, the principal agent problem is solved. And that's why so many companies in Japan can get listed on the stock market and can the capital which is listed is sort of gets dispersed among many shareholders. It also explains that you don't need to pay Japanese managers much money because they're not going to run away. Yeah, so you don't need incentive. You don't need incentive pay. They are already incentivized by their career prospects by making sure that the company survives. So in that sense, that explains these in-house careers explain the performance of corporate governance, which I mentioned before. However, everything has also a downside. And the downside is that if the career is tied to the company, then the career risk is also tied to the company risk. And that means that managers will naturally become very risk averse when it comes to deciding the strategy for the company. They don't want to put their career at risk. At other companies where your career is not tied to the company, you might think, well, I'm going to risk shareholder money. If it goes well, then everybody wins. If it goes bad, the shareholders lose, but I can move on and continue my career somewhere else. In the Japanese case, of course, you also put your career at a risk. You not only put the money of the shareholders at risk. So this creates a high risk aversion, and that is, of course, linked, first linked to performance. Also, Japanese managers, and they want to protect, they need to protect the company to preserve the careers of middle managers, lower and middle managers. And so they will not choose radical restructuring. They will be slow in restructuring. They will have to take time because they want to preserve the core employees. They are hoarding cash as a kind of buffer, as a kind of buffer to buy time, to gain time in times of restructuring. So that's all needed to protect in-house careers. And of course, slow restructuring and hoarding of cash is also linked to performance. So that also reduces performance. So there are already two indications how corporate governance or how these in-house careers affect both corporate governance and performance. Now let's have a closer look at in-house careers and their relationship to performance. Now, these in-house careers actually became very common in Japan after the war, during the high growth period. When Japan, in a situation when Japan was still sort of catching up with leading Western countries in the US and European economies. And in that context, in this context of catching up with other leading economies, these in-house careers worked very well. There was, of course, Japan at the time, the population was growing, the economy was growing, there was a huge growth potential, a huge learning potential. And the long-term careers, they preconditioned the willingness of corporations to invest in the training of their employees. If you know, as an employer, if you know these people will stay with my company, then of course you're willing to invest in their training. If you are afraid that they will leave, then you might not invest so much in their training. So given Japan's need to train a lot of people in order to adopt foreign technology in the catch-up, during the catch-up period, high growth period, these long-term careers, in-house careers, were very helpful, very beneficial. The strong loyalty to the company supported the organizational learning, and the growth potential that was inherent in Japan's position also reduced restructuring risk. When you grow, then you can fix a lot of things while you're growing. So less worrying about the downsides of in-house careers. But the downsides, they started to dominate once catch-up had been achieved, and Japan had sort of the technological trajectories had been exploited in many areas, and Japan was reaching the top level, top technology rank in many areas. Because now, of course, you're in a different environment. The growth potential is exhausted. You are already at the top, so growth basically becomes slower. The population growth rates were declining, and so the whole environment was very different. Also, there was a new technological regime, the digitalization, the internet, and so on. So what you need in a dynamically changing and globalization should also be mentioned: the rise of China, Japan, who was chasing the leading economies in the 1970s and 1980s. Japan became now chased by other new dynamically growing economies. So in that environment, you need a different kind of management, and there is more uncertainty. You need to take higher risk. Higher risk cannot be avoided. At the same time, the domestic market became saturated as the population was stagnating, and since 10 years, it's also been declining. So resources needed to move across company borders. Further globalization needs to be pursued. So we see that change actually when we look again. We go back to the productivity, the GDP per hour. Oh, sorry, I just see that again. I have this missed here. And so we compare Japan, Germany with the US. Again, the US equal to 100. And we see that from the 1970s, Japan and Germany catching up. Germany actually touching closing the gap with the US in terms of GDP per hour, labor productivity per hour. Japan also similar, but still with a gap. But then in the mid 1990s, Germany and Japan both fall back. Japan doesn't recover. Germany recovers after the Lehman shock and gets again close to the US level. But Japan, so from the mid 1990s onward, Japan again loses momentum, and the gap between Japan and the US in terms of GDP per hour increases, to now again 38%. So something happened here. So we could say maybe here this up to here, the Japanese model, the Japanese system was performing well, but all these environmental changes, lower growth, population aging, then of course globalization, change in technological regime, and so on. A lot of changes, and the system didn't seem fit anymore for the new environment. Now, but there is more to it. There's more to it. We can say a little more. The relationship between in-house careers and performance. I mentioned performance. I mentioned the performance puzzle, and we have excellent resources, but we have a poor performance. So obviously, as an economist, you would say that's an allocation problem. No, the resources are not allocated in an efficient way. So something wrong with the way resources are being used. Now, in the economy, resource allocation occurs at 3 levels. The company level, resources are allocated through management decisions. At the industry level, resources are allocated through competition. The companies who are successfully competing, they will get more resources, and the companies who lose in competition, they will, of course, have to give up resources. And the international level, through global division of labor, depending on the movement of exchange rates, comparative advantage, that decides basically how resources are allocated across industries. Some industries, exporting industries, will get more resources, and industries without a competitive international advantage, they will have to, the imports will flow in from outside, and they will have to give up resources to the exporting industries. So we have this resource allocation at 3 levels, and all 3 levels are relevant, of course, for the overall economic performance. Now, in-house careers are related, can be related to all 3 resource allocation levels. At the company level, I mentioned already the risk aversion created by in-house careers, by tying the career risk with the company risk. Then also related to in-house careers is a very strong consensus orientation among Japanese in the way Japanese companies are managed. Why? You need, if you know that your career is with this company, you don't have an easy exit option, then the frustration will stay within the organization. People will not walk away. So you have to make sure that the people who stay, who are to stay, that they in a way agree, that they feel in a way included. So you have to include more people in the decision making, and maybe also lower level managers, in order to gain their support and to motivate them and to see that their interests are respected. Another problem is, of course, entrenchment of these insider directors. They only know their own company, and they know we need to stay here. So they will do everything for the company to survive, even if it's not in a productive way. And of course, lack of diversity. I mean, top management in Japan lacks, of course, women. They are very few. There are hardly any foreigners there. But in a global environment, and in an environment with a declining population, you need more diversity. You need to open up the system. But the in-house careers are, in a way, somehow discriminating against outsiders. It's a very exclusive system. At the industry level, of course, there's a lack of mobility of resources across companies, because the managers are stuck within a company. They don't move between companies. So, which means that if companies get merged, then you confront two companies with very different internal structures, because they've been isolated from the outside for a long time. They have very peculiar corporate cultures, and post-merger integration is much more difficult in the Japanese case than it's difficult everywhere, but in Japan it's specifically difficult because each company has its own idiosyncratic structure. Entry growth, well, there are barriers for startups and small and medium-sized enterprises because they cannot get the management resources they need in order to grow. And at the international level, Japan is an open economy in many ways, and Ueki-san from JETRO will know that JETRO is trying to attract a lot of foreign companies to invest in Japan, and they regularly do surveys what is obstructing companies, and often it's the access to human resources, especially also skilled managers. And these skilled managers are stuck in Japanese companies in in-house careers, and hard for them to move. And so the market for talent, the market for top managers that international companies can benefit from is very small. And that's a reason why the level of outside investment of foreign direct investment into Japan has been very low. You see here the stock of foreign inward FDI relative to GDP, and Japan appears to be closed. It's not closed in terms of regulations. It's closed because these companies, these foreign companies, have difficulties in attracting talented, gifted personnel, especially managers, away from Japanese companies. You see here that Japan has been considerably at 4%. Actually, here there was an increase. There was, I think, under Koizumi, the initiative to raise foreign direct investment from 1% to 4%. He actually achieved it, but since 2008, there hasn't been much change. The number has been very low. Okay, so that of course influences the division of labor between Japan and other countries. Normally, FDI has a positive impact on productivity because foreign companies, they have a productivity advantage when they invest in another country. But if they are somehow constrained in exploiting this productivity advantage, then of course the economy will not benefit from it. Okay, let me conclude. From my analysis, saying that there's these institutionalized in-house careers, they have been very beneficial for Japan when Japan was catching up until the bubble, until the early 1990s, there might have been signs of deficiencies already in the 1970s and 80s, but still the economy still had enough momentum. But since the 1990s, the advantages sort of became smaller and smaller, and the disadvantages of in-house careers became more evident and more important. So what is needed for Japan, and these in-house careers, they influence both corporate governance and they influence performance. So what is important for Japan is actually the key to Japan's revival, based on my analysis, would be introducing a market-based career for higher managerial positions. That's more easily said than done. We can discuss how this could be done. So recent corporate governance reforms, they only tackle the career end. They only look at the director's level. You know, the end of the in-house careers, the end is these inside executive directors with a 30-year career in the company. They only tackle, so the corporate governance reform says, here you have to put in outsiders. But these outsiders are still outsiders. They're not really part, it's questionable to what extent they are part of the decision-making. They more and more part, but it's still difficult for them. And still, will these outsiders actually change the system? Can you change the system from the top? Yeah, I don't think it's enough. So the reforms might help to spur the introduction of market-based careers. If they can do so, then the reforms will also benefit from such careers, from the introduction of a market-based career system. There are, of course, a lot of barriers, fundamental barriers. The possible channels of change would be foreign subsidiaries or new Japanese companies or globalizing Japanese companies who need to open up their career system, who realize, who have enough sort of sense of crisis to take action. But it's difficult and time consuming, and it can be very messy. So a very pragmatic point of view is not, the corporate governance reforms, they tackle the end of the career. My suggestion, which is also radical, but I think it might be more effective, is to abandon the entry point. This shukatsu, shushoku katsudo, combined with the ikkatsu sayo, this hiring of new graduates, hoarding of new graduates by the large companies when these people leave university. Finish the ikkatsu sayo, because the ikkatsu sayo only is there for these in-house careers. Without the perspective of an in-house career, you don't need ikkatsu sayo. You just hire people for the job, like you do in most of the other countries. So yeah, that's my analysis of Japan's corporate governance and how it relates to Japan's performance puzzle. And I'm very much looking forward to your questions. Thank you.
Well, thanks a lot, Professor Waldenberg, for this fascinating presentation. This very critical issue of Japanese corporate governance, and I think you did a masterful analysis and a very comprehensive one, trying to figure out not only the nature and the origins of this, but also the significant impacts on Japanese corporate governance in a comparative perspective. So I think was most interesting. Without further ado, I also have some questions, but I'll give first the floor to Dr. Ueki-san, Yasushi Ueki from ID Jetro, to make a first round of comments, and afterwards we can open the floor to other questions and comments. Thank you, Professor Waldenberg, for the great presentation. Ueki-san, yes. You have the floor.
Yes, thank you very much, Antonio, for inviting me to this very interesting workshop meeting. Sorry, and I prepared some slides. So if we have a time, I'll share. Where is that? Sorry, I'm taking time. Sorry. Okay, so I think my understanding of the corporate governance is a bit broader concept compared to the Professor Waldenberg. But so firstly, I would like to say that employees' loyalty to the company is very important for Japanese companies to improve the performance. But recently, what we are seeing is the many bankruptcies due to the compliance violations in Japan. Since in this slide, you may see that on the left side, we can see the graph showing the number of the bankruptcies due to the incompliance. And we can get this kind of data from 2005, and we can see that the increase of this type of bankruptcies by 2015, when, as Professor Waldenberg explained, that the Japanese government also tried to promote the improvement of corporate governance. So also, I think behind this changing behavior of Japanese people working in Japanese companies, so there are many factors, I suppose, that would be related to the corporate governance. That means the systems that will that affect the attitude of the management team. And then, so if we look at the two period for comparison, during the high growth period after until the around 1990, so Japanese companies pay attention to the multiple interest of the multiple shareholders, including local communities, customers, suppliers, and employees, and so on. But after the bubble economy period, so companies emphasize the importance of the interest of customers only or shareholders. And also, financing system has changed from Japanese main bank system to the more direct financing system. And by changing this financing system, so monitoring system has changed from a main bank system to investor monitoring or external board of members monitoring. So in that way, corporate governance system has changed in last 30 years. And the safety net for companies has also changed because of the changes in the monitoring system. So in the past, the main bank used to help the company when a company had difficulties in their business. But after the structural reform during the post-bubble period, we could observe more state involvement in helping private companies. So that is a big difference, and also may affect the risk-taking behavior of the top management. And also, labor, employees is not only the labor forces, but also a very important part of the corporate governance systems that help or that help the improvement of firm performance. And the labor union in the past had a very close relationship with top management to improve the company's business. But the labor union the ratio of the participation ratio of the labor union has been decreasing in last 20 years. And the employment status became unstable compared to the after Second World War and after bubble period. In general, we can say that employees has more concern about their stable position in the companies because employment status changed from regular status to the non-regular status, and the contract changed from lifetime based to the fixed term based. And also seniority system was used to be important systems, as Professor Waldenberg explained, to promote that guarantee the promotion and the increase of the salaries during the lifetime employment. But this changed a lot from particularly more salary paid based on the performance of the employees, individual employees. However, the seniority system still remained. So, and also recent COVID affect some companies' behavior. Behind it, there exists a changing behavior of the manager side. Firstly, customer relationship in the past, it depends on the personal relationship, but because of the movement to the online negotiations, the customer relationship has changed from a personal basis to the technical competence of the individual employees. And in the past, the communication skill was important inside the company and also the between the companies, but now technical knowledge is more important to talk online. So career path may be changed, or skill set will be changed. On the other hand, employers pay attention to the workers' health and their daily life. Or in other words, government also companies pay attention to the work-life rebalancing in the labor shortages. In the past, last 30 years, companies empathize the importance of customers' interest. But now companies understand they don't need to visit their customers every time they talk. Rather than they can use both in person and also online systems for communications. On the other hand, by having more time for paying attention to the labors, their employees' life rebalancing, work-life rebalancing, so companies can pay attention to more local communities. So without the support of the local communities, companies cannot continue their businesses. That is increasing awareness on the relationship between companies and the communities. And also government changing from the market-based to more, how to say that, multi-stakeholder basis, and also returning selective industry policies. So, so differently from Professor Waldenberg's discussions, there are some opposite movement in the society. Also, on the other hand, as Professor Waldenberg recommended, there are structural changes in the labor market and also the work-life balance. So we should observe how COVID-19 is affect on the corporate governance and firm behaviors. And also there are many challenges in the Japanese society in addition to the corporate governance. Of course, as Professor Waldenberg emphasized the importance of corporate governance, but behind that, we have to find some cultural factors that constrain Japanese companies to take the growth path, like inward-looking behaviors of Japanese companies that also help the maintaining in-house career type system. And Japanese lacks the confidence in the boosting growth potentials, and also Japanese government role, increasing role in the wage negotiation, for example, and also the subsidies to maintain the business activities in the COVID-19 remained so-called zombie companies that will affect the structural changes in the private sectors. And the Japanese lacks awareness of falling behind other countries, although, as the professor emphasized, lower productivity of Japanese economies. And also, Japanese people doesn't not necessarily try to get more salaries. Rather than increasing salaries, they try to find a way to satisfy with what they have, and and also pay more importance in having stable employment and stable life. And so a company also considers as their responsibility ensuring employment is very important. So rather than continuing, rather than unstable growth. So that's kind of Japanese cultures. And also from as a matter of the top management and corporate governance. So there's a lack of leadership and shared long-term visions. That is indispensable to make investment in human resources and so on. And also, I would like to emphasize the importance of willingness to sell. Of course, as the professor mentioned, that Japan has abundant resources, but I think Japan does not use such resources to increase sales. We use that resources to make innovations, but that will not lead to the sales. That is a very important issue. So I don't have any conclusions, but among the points raised by the presentation, I think so. One of the issues that has not mentioned is how to say that unstable job position in for the employees, while the labor market is not it's mobilized. So like the top management market, this kind of labor market constraint with unstable employment status caused by the caused by the reform of the employment contract was one of the cause of the low performance and the low loyalties of the employees that may affect the company's performance. So as I agree that the point raised by the Professor Waldenberg, that the entry point is a very serious issues, not only for the companies, but also the student. And also a market-based managers market is important. That has been discussed for about 30 years, I think. But the situation is not so simple. So there are many issues to be discussed. And but I think that the long life employment is not expected by the many younger people. Now they understand that companies cannot offer the lifetime employment, so that younger people can move quickly from company to company. On the other hand, the company also expects a movement of young people so that they don't invest in training. So I think so. Some movement, the behavior of young people will change the private sectors, particularly startups and also consulting companies or something like that. So traditional big companies will have difficulties in maintaining conventional employer-employment relationship and also the corporate governance model. So I don't know that the young people seek growth. They want to try to work very hard and to get more salary, or they want to get more satisfactions to enjoy more comfortable life, living conditions, including the balanced work-life, more balanced, or seeking more balanced relationship between the working time and their personal time. That kind of issue is still open questions. That's my comment.
Well, thanks a lot to Ueki-san for the
yes,
very nice comments. Sorry, thanks a lot for the very good and very provocative, and follow-up comments on Waldenberg's presentation. And before we give the floor back, to other comments and questions, I'd like to give a brief moment for Professor Waldenberg to have a quick reaction to your comments, and then we open the floor. Okay, Professor Waldenberg.
Yeah, thank you. I mean, of course, I was focusing on in-house careers. So you mentioned a lot of other things that happened in Japan, which I think one thing might be misleading, because on your slide, you said there was a shift. Of course, there is still regular employment in Japan. I mean, it's not all non-regular. Non-regular is about 38% now. And of course, it's caused by the aging. Lots of senior peoples are non-regularly employed. And of course, a lot of women who entered the labor market are non-regularly employed. But I was talking about the managerial career, the managers. The managers are still regularly employed. They are not non-regular. There is a lot of mid-term hires, a lot of chuto sayo, people which are also sometimes in management positions, but they are not considered to be career people. So my point is that those people who make it to the top of the company, especially in larger companies, that they have an in-house career. The number of these people might have become smaller, and the periphery has become larger, but there is still this core. And this core, of course, dominates the policy, the strategy, the behavior of the companies, and they decide about the resource allocation. And the changes yes, you mentioned, of course, the financial system transformed a lot, and so we have a lot of foreign shareholders now in Japan. The main banks disappeared, the stable shareholders disappeared. That's why Japanese companies and the role of the government became more important, which is, I think, not good for performance in a way. But and of course, the companies are hoarding the cash. They're trying to, have this buffer in order to gain time for restructuring. The other thing you mentioned, the stability. The Japanese want stability, which is, yes, it's also a puzzle from the outside, because Japanese are afraid of losing their job. But when you look at the statistics, the unemployment rate in Japan is among the lowest in the OECD. No? So what would you be afraid about? And then if you look actually at the tenure, kinzoku nensu, the kinzoku nensu, it's because of the aging, it has been increasing. There is no, so stability is still there. Of course, the type of contract changed. And of course, the Japanese government made a terrible mistake by saying that these yearly contracts can only be continued for 5 or 6 years. and then people have to stop. This caused a huge unemployment, because after 5 years, companies tell people, sorry, we can't employ you for the next year, so look for some other employer. And that was an artificial sort of unemployment boost for the Japanese economy created by this regulation. I don't know who thought that up. I mean, but anyway, so this is, you are right. You are right with your situation. I mean, and it's very good to get the broader picture of where Japan now is. But I think the core is that still the core which determines the strategy, the strategic orientation of Japanese companies, these in-house careers of managers, is still there. And yeah, it's difficult to say. And my argument is always, as long as companies practice this ikatsu sayo, they still think that they will hire people for the long term. If they don't think anymore, it's not for the long term, why should they do ikatsu sayo? They could just hire the people as they need them. They wouldn't need a pool of people from which they raise the future managers. So for me, the ikatsu sayo is the test for whether really Japanese companies move away from in-house careers for managers. They moved away from lifetime employment for other parts of the employees, but for the future careers for the future managers, I think they still think that they have to raise them inside. They cannot take them from the market. No, that's my understanding from data, also from discussions with companies. Yeah.
Okay, thank you, Professor Waldenberg. Before perhaps giving the floor back to Dr. Weck, for replies, but I would like to open the floor and first use my prerogative as a chair of this organizing this to ask a couple of questions. One is a more clarification question to Weck-san.
Oh, yes.
It wasn't clear to me what was meant by uncompliance in the graph you presented. If you could just explain that a little better, what was uncompliance in the first set of graphics that you presented. And then I had the two broad questions to Professor Waldenberg and also to Weck-san in relation to the reduction of risk taking in Japanese companies as related to the in-house careers. I mean, first, these are two very generic questions, but I think it relates to, as I know both of you, it relates to current projects you have. One has to do how this might affect Japanese growth in new areas like renewable energy and decarbonization, because that implies a significant risk in terms of shifting your development and growth patterns within corporations. And also in relation to that, but as a broader, is in relation to innovation, because the puzzle that Professor Waldenberg set up, mentions R&D and it mentions patents, but innovation is a different business, as we know. And I understand, Professor Waldenberg, your more recent research, covers a little bit more about entrepreneurship and innovation, if I'm not mistaken. So I wonder if you could also have comments on that. But just hold on those questions. And let's open the floor to collect a few more questions and comments, and then I'll get back to you for a final round. Okay, Moises, you are the first one. Anybody else? Moises, go ahead.
So maybe you could collect one or more two questions, or okay. Then my question is, it's about the first one is, how would this compare with low performing countries where the external market is also very much used to hire CEOs, and because this is the reality of most companies in the stock market from Brazil, Mexico, Colombia, and Argentina. So and it seems that not necessarily these there is better resource allocation due to the external market. So this is my I understand that this market executives are more risk prone, more innovative in terms of organizational structure, less cognitive lock-in, we could say. And the second question is, if we don't have a problem of causal endogeneity in terms of institutional change in the corporate governance has been taking place over the last 20 years in Japan. We could say maybe the onset of it was 1997. And my question is, in-house career changed along the way, because although it is in-house career, as Wacky has pointed out, there are many, the mindset or the values and the core beliefs from these top executives, although being also in-house career, but this has changed over the last years. And some management practices have changed the same way. So my question is, can we say that the low performance is due to in-house career, or is it due to this change in the mindset, change in the corporate governance as a whole?
Okay, thank you, Professor Moises. There are any further questions from the two other participants here, Deborah or Jose Marcos? Do you have any questions, comments?
No, teacher.
Okay, Jose Marcos? No, okay, so I think we can then give the floor back to Professor Waldenberg to make some reactions to those comments and questions.
Yeah, thank you. That's what I call the puzzle, you know, that people invest in so much in R&D and in patents, but when you look at it, it's often it's not radical innovations, no? It's sort of continuous innovation, no? So they are these process innovations or small product innovations, and they are not disruptive innovations. So now in the digital economy is based on innovations generated, basically R&D is outsourced to startups. So a lot of startups are doing innovation and more disruptive innovation. In Japan as well, Tokyo as well, at least in Tokyo, there's a growing startup ecosystem, but it's not, if you look at the level of venture capital which goes into there, it's minor to what goes into, well, in the US or other places. So it's the quality of innovation, it's more conservative also in a way. So that might resolve this contradiction between a lot of R&D, but risk averse. So it's R&D, conservative R&D, I would say. And the other point, of course, in-house careers alone don't create productivity. The puzzle I was referring to is that Japan has excellent resources, more excellent resources than the US and Germany, and of course, Mexico and Brazil in terms of level of education, technology, and so on. But then Japan, because of these excellent resources, Japan should also have high productivity, but it has below average productivity. So that's the puzzle. I'm not saying that in-house careers generate productivity. In-house careers help to better allocate excellent resources. If you don't have excellent resources, the allocation result will not be much better than, you know, you have to combine it with the observation that Japan has these excellent resources, and they are obviously not put in the most sort of best way. That would be this question, and the other one, of course, there is change, and it's a question on how can you quantify change, and what kind of quality you can attach to the change that there is. Just yesterday, I had a talk with the Kansai Doyukai, the people from the Osaka area, Osaka, Kyoto, Kobe area, how do you say, entrepreneur organization, and they were discussing exactly the problem of low productivity, and they the way they look at it is, I didn't see any much change in mindset. Of course, they come up with some new concepts, but they think still in their framework. They still think of the company is a community we need to preserve. We need to offer stable employment, as Ueki-san said, which means, of course, long-term employment. And the top managers, we're not going to hire top managers from outside. We can hire people for specific tasks, for example, risk managers or people in the IT business with have special knowledge. We'll hire them, we'll pay them a higher salary, but they will not be our sort of core management team. No? They will not be involved in strategic decision making. So we'll separate. They keep these people separate. So from that, I don't see. And of course, for me, the test is ikatsusayo, the hiring. This one in a year, you hire all the graduates. It's a one time all. And this is, if this doesn't change, then I think the fundamental idea behind the system is not going to change.
Okay, Ueki-san, you want to add some comments on that?
Yes, thank you very much. So firstly, I have to respond to your question about the definition of the bankruptcy due to the incompliance.
The non-compliance, thank you.
Yes, so I don't know the detail, but so some incompliant behavior by companies cause difficulties in securing cash flows. That causes bankruptcy. That is a story, I think. Okay. So incompliance activities, behavior will decrease the trust of the companies. So that makes a problem for their suppliers and customers to continue their businesses with incompliant companies. In that way, incompliance will cause difficulties for running businesses continuously. That is the story. So there are several categories of the compliance validations, like accounting fraud, for example, law violation, tax evasion, illegal dumping of waste things, something like that. So that way, there are several categories of the incompliant activities.
Can I ask an additional question? Do you know the size of these companies? Are these more smaller companies or larger companies?
I have not. This is a Teikoku data bank statistics, and they show only the number of the event cases, and also distribution by industry type. So if I check carefully the text, there may be mention about the size, but mainly they open the data on the number of cases and the number of cases by industry, like services, construction, manufacturing, something like that. And so I think so the majority of the Japanese company based in Japan targeting Japanese market, hiring Japanese only. So as Professor Waldenberg explained, so there's not big changes in general, but I think as I mentioned that also there is some changes, gradual change, not radical change, even in the top management job market. I think in the past, particularly when I was an undergraduate student 30 years ago, there's no such significant market. But now I think the issue is of course, there's some movement of the specialized people and also managers, like when a company try to enter into the new businesses, like automotive industry now, they try to enter into the services sectors, for example. They hire the managers and also engineers from outside. So in that way, the people are moving. But the issue is maybe there's some kind of fragmented market, divided market, very traditional market, and also a more new market. in the job market. So like a top management market, there's a movement between companies among people who used to work a foreign affiliate in Japan, for example. But Japanese managers who used to work in Japanese big companies doesn't move from Japanese companies to Japanese companies. So that kind of, and also there's a engineers market, I think, that is also big compared to the white collars market. So particularly foreign affiliate companies in Japan seeks skilled and knowledgeable engineers and also the managers, the middle and the top managers. So for that businesses, there exists a market, but still that the size is not so significant, as the professor mentioned. So that the point is that how to observe from which side, and how to evaluate. So there's no how to say difference among us about what we are talking, but we are talking from different, focusing on different point. That's all.
Okay, I had a follow-up questions on Ueki-san comments. And it has to do with the labor market, also in relation to what Professor Waldenberg mentioned about the startups and how the number of startups in the Japanese stock markets relatively higher compared to other countries. I mean, so I mean, one question is more empirical question. I mean, do these startup companies, do they have difficulty in let's say in hiring the best engineers in relation to the system that sorry, I already missed the Japanese term for that. I mean, so and that could pose a problem for growth. And that leads me back to a question to you, Professor Waldenberg, in relation to your comparison with Germany. I just became curious now, because in the graph when you showed the recovery of German's labor productivity, we all know that the German face the same problems as Japan in terms of venture capital and startups, the failure of the Neuer market. But it seems that the German rebounded, in terms of labor productivity. So in your view, it's not, I know it's not a focus of your study, but since you're doing this comparison, what happened in Germany, that was different from Japan that allowed for Germany to recover beyond the aging of the population, because since the German as Japan also was unable to deal with venture capital startups, it still has problems with that, because of the corporate culture and the corporate structure, etc. So that's one question. And then I just want to throw two provocative questions, not questions, but just issues. To what extent, let's say the Nissan imbroglio to one side and the SoftBank success on the other, do they affect, or will they have an impact on the sort of the pace or the content or the structure of the reforms that might be happening in the Kishida new capitalist growth policy, or they didn't affect the Japanese corporate culture and corporate governance? So just like these are more generic, provocative questions, just to hear from you. But please go ahead.
Yeah, the startups, they are, of course, if you compare Japan with Germany, actually Japan has more unicorns than, of course, much less unicorns than China, than US or China, but it's more unicorns than Germany. And the Japanese startup system, they have a lot of, that has to do with the stock market, the attractiveness of the stock markets. There are lots of IPOs every year. So it seems that, but of course, the size itself, is about, the venture capital size is about, I think, relatively the same as in Germany. It's not the venture capital that goes into startups. And recently also, especially high-tech, large companies have discovered the advantage of startups, and you have corporate ventures. And of course, you have these SoftBank and Yahoo and telecom companies who have their incubators, and they want to learn, they want to take advantage of startups. Or even Toyota and others, they invested in startups for autonomous driving. You need, AI and so on. Then you have Tokyo University, you have Keio University, some professors who sort of nurture entrepreneurship. And so slightly there's for some people there's a change of attitude. So startups might even get top top engineers from Todai or Keio or Waseda for that to start their business. But it's then the experienced management, experienced management. I think the handicap, there was the recent report comparing ecosystems globally. Tokyo climbed up to rank 9, I think. Tokyo entered the top 10 global ecosystems. It was excellent on all categories, but the worst category was connectedness. So this lack of especially international connections. Yeah. So what makes Silicon Valley strong? It's all the foreign international talent that goes there. What makes Berlin so strong? It's all the foreign people who come into Berlin. Yeah. And Tokyo is, of course, at the moment, no one comes in, but even before the pandemic, it wasn't attractive for foreign people. So foreign talent, the attractiveness of foreign talent and international connections. I think that's the biggest handicap now. There's enough capital in the Japanese system, but and for the growth, of course, you need managerial resources. At some stage, you need more people, and so when successful startups in Japan, they do IPO or they get maybe taken over by a big Japanese company, but it's the limitations are the international. I think the lack of internationalization in that sense. Yeah.
Just quick comment or a question. I was just wondering whether this labor-intensive work organization in Japan, because when you go to a shop or to a supermarket, it's much more in general, this customer service is so labor intensive in Japan. And my question is, to what extent this is also the cause of lower labor productivity in the country? Because this is a huge contrast with Germany, for example, and with the US. It's not so. And the other question is, when you compare with Germany, don't you think that still, despite this disruptive innovation, because it's now changing, I and Antonio were in Germany over the last 3 years, and we were doing interviews with companies, and this model of startups and large companies with incubators and startups and helping, it seems it's really working. But apart from that, there is this issue of Mittelstand in Germany, which is to a certain the hidden champions, and this is a very powerful engine in the German economy. And I don't know. It seems Japan is not so strong because these companies are usually in the supply chain from large companies, Keiretsu, and it's different from. Could you make a comment?
Well, yes. I mean, I think there are many aspects to it, and one is also related to in-house careers and the Ikatsu Sayo, because the Ikatsu Sayo, meaning you're hiring the best people. The best people are hired. The big companies are hoarding the talent from the universities, and that puts the small companies at a disadvantage. If you don't have a reputation in the university graduate labor market, you don't get these people. They're just taken by the big companies at once, and that's not something that's happening in Germany. In Germany, you have many paths, and of course, we have the dual system of training, where a lot of small and medium-sized companies are actively engaged in training people. Then, of course, we don't have the regional concentration like in Japan, where you have. I don't know, the Kansai, but especially the Kanto area and the Kansai area, where everybody has to go there if you want a reason to. In Germany, you look at the small, medium-sized companies. Even the headquarters of the big companies, they are all spread across the country. You have universities in many regions, top universities. Berlin is the capital, but I mean, a lot of things are going on in Munich, in Frankfurt, in Cologne, in Stuttgart. So it's not like in Japan. So there are lots of aspects. I think the regional economy is very important for the power, for the strength of small and medium-sized enterprises, and the strong concentration in Japan on the Kanto and Kansai area is a handicap for the small and medium-sized enterprises in the regions, because all the people go there, all the talent goes there, and it's very hard for them to get, even if they have the technology and so on, it's hard to get the people they need to grow or internationalize.
Okay,
thank you.
Waki-san, would you like to add some comments on that, Waki?
Yes, I think firstly that international connection is a very crucial issue, I think, for Japanese society to become more open, and also how to say, as I mentioned, that how to sell product and services, very important topics. So looking at the global internationalization processes of the Japanese companies, they achieved the current situation, I think, by the mid of 80s, I think. Then there's not substantial changes in the market, in terms of market. Of course, for the production, there are many companies keep going out. But I don't see a bigger presence in South America of the Japanese companies compared to the 30 years ago, for example. So in that way, how to sell, how to understand how to say, how to sell is very important, and we should learn from the Chinese, and we will learn from competition with China, I think. And also that internationalization is very crucial to maintain the Japanese society itself. So as the professor's presentation also described. So that's a very difficult issue in the aging society. As Professor Moises asked, why so many people working in supermarket? Because we have automated cashiers, but elderly people cannot try to learn how to use. So that kind of issue is very crucial for society to promote, to be more innovative, to be more adaptive to the new technologies. So that is what I could add. And also very interesting to talk about the startups, entrepreneurship with German people, Japan professor, because I think Japan and Germany are the lowest in the bottom in the bottom of the list in the GEM statistics that measures entrepreneurship. So I think, but the entry point Ikatsayo is very unique in Japan compared to other countries. So that I have never seen that system, and I don't know why. I personally I cannot understand why company still wants to maintain that system. Why the cost of the recruitment? I guess particularly for large companies, they want to avoid competition, annual competition for the 1 year. So and also they have a schedule to recruit and to give training, etc. So they are the human personal affairs people are very busy. so that that kind of job cycle for personal affairs also affect. But there's no advantage for students, companies, particularly SMEs who doesn't have resources to recruit and also to give training. So SMEs need a more well-studied undergraduate in university with specialized knowledge, and without adding special on-the-job training, off-the-job training. SMEs want to have a good student. So that Ikasayo system hinders these opportunities for the student side also. So this is a very problematic to maintain the quality of university education. So and also frankly, so as Professor Waldenberg says, company still maintains in-career promotion. This is true. But on the other hand, my former colleague who teaches at the university told me that the training situation in company training situation is quite different from currently is quite different from my generation. So companies doesn't invest a lot in the human resource development compared to the 30 years ago. So that maintaining Ikasayo system and the in-career system makes a problem, I think, increasing problem for Japanese society and economy. That is my opinion, observation, but there's no evidence on based on the academic studies.
Yeah, but that may come back also to question by Moises, is that there is change, but change can be counterproductive if it's sort of in between. You know, if you have complementarities in the system and you try to change a little thing, and then the other things are still there, and then you cause contradictions in the system. So I think that's partly happening in the human resource management system in Japanese companies. They see that they need to open up. They do open up bit by bit. There, for example, midterm hires, but that makes the whole personnel, the HR system, more complex and complicated. And because they try to stick with the old system at the same time. Yeah. So this makes, I think, so this gradual change can lead to a worse situation than a radical change might in the beginning be maybe worse, but if you recover, it's more consistent. The gradual change might just lead to a gradual decline because of inconsistencies. No?
Okay, so it seems like we're almost pushing to almost 2 hours of this event. I don't want to exhaust either Professor Waldenberg or his commentator, no Weki-san. So unless there's any other further questions from the audience, I'll just like leave one final provocative question, not provocative, but rather, in terms of policy, as Professor Waldenberg started to address, what are the possibilities of the current Kishida government, with its new capitalism growth policy? Is there any possibility it's going to change that, or it's going to lead, to changes within the corporations, or would be any major drastic reform? Do you see any? Just like to hear from your policy opinion about that, whether there's any horizon for change or not.
Well, I think it's a new confidence. I think, people are maybe a bit tired. Abenomics was trying to push maybe towards to further Koizumi and Abe were furthering sort of more the neoliberal ideas. It's always questioning how successful they actually were, but now I think Kishida is a little bit more confident and saying there is a Japanese way, and that's good, I think. In the same way, if you look, Germany introduced its corporate governance code, for two reasons. One reason was to improve the system, to have an ongoing discussion about corporate governance and steadily improve the system. But the other reason was to tell to the outside people, this is the German system. This is how it works. Mm-hmm. And when Japan introduced corporate governance code, this is missing. Japan is in a way just trying to, introduce bits and bits of the US system, maybe to please US international investors, but it didn't have the confidence to say, look, people, our system is different. It works in this way. And maybe maybe the Kishida, I don't know, I haven't really studied it in detail, but one positive way could be that there is more confidence now in saying we have our own system and we have to find solutions within, given our own system. So in that sense, I hope there is something positive in it.
Great, thanks, Professor Waldenberg. Ueki-san, would you like to have one final comment on that?
Yeah, I think so. The relationship between the society and the company is changing. One of the causes is COVID-19, I think. Company need to, and also the labor shortage and the aging society. So that kind of issue will change the orientation of the company's business. But of course, we need to think about the Japanese business in the context of global competition. So still, there's no clear directions from the government how to realize, to show what is a new capitalism for Japanese, that's suitable for Japan, and also how that kind of system will be suitable to the newly emerging international competitive environment and also a political environment. That is a very big issue, I think.
Okay, unless Professor Moises has any other comments or questions, I'd like to thank, particularly Professor Waldenberg for his time and for his dedication with this presentation, which was very inspiring. I think generated a very lively discussion among us here. Unfortunately, have a small audience, but I think a very interesting one. And also, of course, Professor Dr. Ueki, from IDJETRO, for the very insightful comments and challenging ones, in relation to the thesis and the argument that Professor Waldenberg defended. And also in the general discussion we had here, I think was mostly interesting and mostly enlightening, at least for us in Latin America, in terms of both in Germany, but also not only in Japan, but also in relation to Germany, as we, as emerging countries, have to learn and appreciate, the diversity of systems that we have throughout the world, and that's one of the purposes of this series, to be able to look at other countries' experiences and the differences and idiosyncrasies and see how we can adapt or not to our own situation. So unless Moises, you'd like to have any other comments?
Yeah, I just like to reinforce my thanks to Professor Waldenberger and also to Ueki-san, I could say, Professor Ueki-san. And I just a final comment that I found very interesting, the counterintuitive results to a certain extent from Waldenberger in relation to what Aoki and Gregory Jackson and Aoki, who's already dead, they have a discussion about corporate governance in Japan, and I do hope that we can keep an exchange in these topics and Japanese economy. Thank you very much.
Well, thank you again. So, and I hope, as Moises said, you have the opportunity to get together, lively in person in the future and different opportunities. Either, as mentioned to Ueki-san before, there'll be the SASI conference in Rio 2023. Perhaps you can organize something there.
Okay, yeah.
Or elsewhere. So I'm sure that we'll be able to see each other and continue this very lively and very interesting conversation, which I think is most insightful to all of us. Well, thanks again, Professor Waldenberg, and thanks.
Thank you. Thank you.
Thank you very much.
Have a good evening. It's very late for you guys.
Have a good day. A good night.
Have a good rest. Thanks 1,000 for you.
Ueki-san, let's meet in Tokyo sometime.
Yes.
In Tokyo, Rio.
Okay.